to me, it was like a no-brainer to like reroute even just like my RRSPs, because why would I want to put money like 25 grand a year into my RRSP that I can't access till God knows when? That's really going to make the government more money than I'm going to get out of it in the long run. You know, so I'm like, it's literally just a matter of rerouting cash you already have and cash you already use. And I just think like if I had had the system going, you know, like when I started working in my 20s, we could have alleviated that entire problem. I never would have had anywhere near the financial stress in my entire life as, you know, that I have had. Like if I've had this system going, like if anything, this just decreases my financial stress to such a degree that I can't even explain it, because I'm just rerouting money that I already was just putting elsewhere. I tell people this all the time. Like I feel like my biggest mistake when I started my policy was just thinking too small.
How can I help today? How can I add some value?
Really, I just, like I said, I think things are going actually pretty good. Like we're slowly expanding the system here. Like we got my husband on board, and then got a policy for our little guy, and one for my mom to kind of cover some joint debts that we have, because we bought a fourplex out in Moncton. So the real estate is slowly expanding. I'm slowly kind of taking over all of my debt, like for the Smith maneuver and everything, into our policy loans. So yeah, it's happening.
I've expanded my system significantly as well since you and I last chatted. And yeah, it's the same thing. Like I wish I could do more, and but you know what? I've paid off my Ford F-150, recapturing those payments, crushed, you know, prior to, you know, really getting the momentum in the business. Like I was carrying credit card debt for a long time. I've been able to lend some money to our family's construction business to wipe out some vehicle financing so we can recapture those payments.
Nice.
I mean, and then, you know, using policy loans to fund my lifestyle as well. I don't spend a single dollar of my own money, which is pretty awesome.
Like it's amazing when you really start wrapping your brain around it. Like I was reading some of the bank notes from the Nelson Nash Institute, and it was like the one article about taking like the money that you have allocated for taxes every year, you know, and then like rolling that into policies instead, like as premiums, and then just taking out the policy loans for it. And I was just like, man, there's just so many different ways that you can like just like do all this. And like how, like, you know, it's just crazy how, you know, the more ways like you kind of think about, the more opportunities you have, and like how much money we really are just losing that opportunity cost on, right? That like flows through our lives. So
and that's the beauty of it, Rebecca, that you have that perspective. There's no like, you're always thinking, now you're at the point where you're thinking creatively in terms of how you can expand the system and how you can use it more and all the great things that can be done. Whereas, as you probably know, conversations that we have, some people are, you know, they're grappling with that consumer mindset. They're grappling with understanding, oh, like premium deposits versus the fact that you're already depositing all of that money in someone else's bank anyway.
Yeah.
You know, I just,
it's, to me, it was like a no-brainer to like reroute even just like my RRSPs, because why would I want to put money like 25 grand a year into my RRSP that I can't access till God knows when? That's really going to make the government more money than I'm going to get out of it in the long run. You know, so I'm like, it's literally just a matter of rerouting cash you already have and cash you already use. And I think that's, you know, what people have a hard time like grasping that concept. Like you don't have to come up with more money. You just reroute what you're doing, you know, and especially for like businesses, man, like, you know, having a business and being incorporated, like there's just so many options that you have that are just like wide open, that you could have these amazingly large policies. Like
once I got my mind wrapped around all that, it's just a matter now of capitalizing the policies, even though we can use them right away. It's just a matter of capitalizing the policies to the point where I have enough capital where I can solve objectives and then get that, what I call the recycling process going, right? And, you know, then you're just continuing to control more and more of the banking function. And then I have more capital available, I can expand my system, right?
Exactly. Like I, you know, even start doing things like implementing the using the policy loans in my son's policy to add to like investments so that we get a good return, and then just recycling all of that return into the policy. And by the time he's 10, I'm basically going to have it so that entire policy is paying for itself.
You're right? Like if you're taking that money from the policy, it doesn't matter which policy, but let's say your son's policy, put into an investment. If that investment grows or creates cash flow, well, guess what? Now we have a home, replenish the loan, right?
Exactly.
And then by the time he's 10, to your point, there's gonna be so much cash built in the policy. You're probably gonna have cash flow coming in from investments, which will fund that premium. And just, you could offset it and not put premium in, or you could just keep putting more fuel in, and the fire's just going to burn hotter and brighter. Right.
That's what I mean. Like once any of my policies kind of become what I call self-funding, it's just get another one, get another one, get another one. Yeah, because they can all be at that point where they become self-funding. So.
Yeah, and you know, they can totally fund themselves, and that's the beauty of it. If you get to that, what I call, you know, what they in the industry they call the offset point in Canada. If you get to the offset, I always, by the way, I would recommend, even if I look at the premium offset year 7, let's say, I always recommend to capitalize for at least 10 years.
Yeah.
But here's the beauty of it. Let's just say you decide, because it's best for you and your family and your system. Maybe mine's different, but you decide at year 10, you know what? I'm going to offset this policy. I'm going to let the cash value and the dividends pay for the premium, because obviously the base premium has to keep coming into the policy. At any point in the future, you could just decide to start depositing premium again. And if you did, it's just going to make that policy more efficient.
Yeah.
More cash. Now, the only thing that you should look out for in Canada, I don't know about the US, but in Canada, each company is a little different. And you may or may not already know this, but if I offset my premium, or let's just say I am putting in the base premium, but I'm not putting in the additional premium, it's use it or lose it. If I go like however many years, it could be decreased because they take the average of whatever the last 3 years, however that rule exactly works, I have to look it up, or I could lose it altogether. Whatever. If your son's still healthy and you offset the policy from age 10 to age 16, well, he's healthy. You could just reapply for that additional premium option and add it back to the policy. But anyway, the point is, even if you just started putting the base premium in, the policy is going to still be immediately more efficient. That's why we structure the policies, obviously, to hold premium till age 100.
Yeah.
Awesome.
I believe in IBC so much that I honestly believe everybody should be doing it. No matter what level you can do it at, you should be doing it, because it's just going to help you financially that much more, you know?
Yeah, no,
and I wish I could help people wrap their head around it so much better than they do normally. Like I said, I've lent out my book I don't know how many times. I wish I had like 50 copies of it. But yeah, like I said, I'm always willing to talk to anybody, you know, in the investor groups that I talk to. I'm just like, if you just want to have a conversation, like there's just literally like no pressure, no, you know, no sales. You can just kind of see some examples of stuff. Like, you know, I'll show you my own things. This is what I'm doing. This is how I'm making it work. And just to give them examples, and just so they can kind of wrap their head around it, right?
Yeah, no, that's exactly right. You know, have them read the book, have them consume content, show them what you've been able to do. That's no different than what I do. It's just now, the more you see it, the more you talk about it. It's like Nelson says, the more you see this process, the more you'll see you didn't see. And it'll just keep getting easier and easier and easier to have the conversation. But to your point, we can help people wrap their mind around the fact that the money has got to be and is already being deposited. So you just have to start and build something that makes sense and that's sustainable for you. What I'm doing or what you're doing and what somebody else decides to do might be different, but just get started, right? Yeah.
And that's exactly it. Like I said, if you can't insure yourself, well, if you have a child, insure your child, because you're still controlling all those cash values. So, and I think that's one thing that a lot of people don't realize, that even if you take out a policy on someone else's life, they're not controlling those cash values. You're still controlling it. So you're still able to take over that banking function in your own life, but using somebody else as the insured person. Right?
Absolutely. Yeah. That's the beauty of what you've got set up now. You can show people, I don't know, but I'm assuming you own your husband's policy, or does he own it? Yeah. We
actually joint own it, just to make it easier.
Either way. So you know, you can own it. He owns it. You probably, one of you probably own your policy on your son. Do you own the policy on your mom?
Yes.
So that's the beauty of it. I always do that when I share my screen with people. I go, look, here's my wife and she's the life insured. And oh, by the way, I'll click on the owner tab and I go, Who's the owner? Oh, I can give my wife permission to have access or access policy loans. I can do third party, but
Yeah.
I'm the banker in the house. She does what she does for our family, and I do the banking. So it just
Yeah.
makes sense that I own the policy, right?
You know what would be a fantastic thing for you guys to do? There's a video in the back end of the client site for Ascendant that deals with in the US, like using one of those truth concepts webinars. It's like a 14-minute video, but it's going over like the government sponsored plans, like the 401k in the US. Having one of those, but actually done like for Canadians, you know, what I think would be so beneficial, because anybody that I've showed that video to, like I had my mom go through that video and she was like, this is disgusting. I'm like, yeah, it is horribly disgusting when you actually realize, like they said, like the government really ends up getting more of your money than you ever do.
I mean, we might be able to do a version of it. It's just that nobody on our team, at least so far, has saw the real need, because it's a very expensive platform. It's good. I'm sure it adds a ton of value, but it is really expensive. But that's the only reason, like, we don't actually have, I could subscribe to it or whatever, but I mean, I personally am not the guy. I'm not the who for, you know, getting deep into calculations and numbers. Although I do personally, if I were on the other side and I was being coached, I also, like, I understand the process. I like seeing that, but I do like to see the numbers, because like I said, I mean, I don't know if you do this, but I download my values like every day almost, just so that when I get on with clients, I can show them, hey, look, this is what the values were on Monday. Look at my loan availability today. And they go, oh, and like every single day they can see that cash growing by $20 or plus a day or whatever it is, right?
Yeah, I've done it like one day and then the next day to see like how much it grows every day.
Yeah.
In
fact, in preparation for this meeting, I didn't think I really needed to, but I did it anyway. I downloaded your values yesterday and today, just in case I know that you have access to it. So it doesn't really matter. You know what would be really cool is, because you're really well versed at a lot of different real estate processes, investing, private lending, doing different things in Canada. And now you're implementing the process of becoming your own banker, the infinite banking concept for Canadians. I think it would be really cool, because I'd love to learn from you as well. It comes up all the time. I know enough to be dangerous. I'm not an expert. If you could chat with me a little bit about the process, if you have some examples, like how you've been using the policy system to help you, for example, something like the Smith maneuver. That comes up all of the time. And so did you have some ideas in mind or examples of how you...
is actually really basic, because I do have the LOC set up with TD, because that's where we have the mortgage. Basically, all of the rental income that I get in goes directly into, like, I pay it to pay down the term portion of the mortgage, which creates availability on the LOC. That LOC
being a line of credit. Now, is that
for
this specific one, just out of curiosity, is that an unsecured line of credit or is it a HELOC?
It's a secured line of credit, because the way the flex line works at TD is it covers basically 80% of the value of the home, right? And then like 65% will actually be available in the line of credit. But what'll happen is that the line of credit, as the term portion is paid down, becomes immediately available until it hits that 15%, because you're only allowed to have the 65% maximum line of credit technically, right?
Which for the real estate investor, as you know, this is an and process. We're not saying, hey, buy policies or implement the process of becoming your own banker. Forget about real estate. We're not saying that. But it is an interesting thing to think about when you think about how much access to capital I have borrowing directly from the insurance company from my policy, or if I were to take that policy with a certain amount of cash value and I brought it to a commercial bank and I were to qualify for a line of credit against that policy, I have to qualify all that kind of stuff. I'm now doing business with a bank. But the point is, banks in a lot of cases will lend you 90%, or in some cases up to 100% of the total cash value. But yet, if I have a piece of real estate and there's no mortgage, the most that they'll lend me for a line of credit is about 65% loan to value. So if we just think of the strength of the underlying asset
Yeah.
And the fact that they'll lend so much on a whole life policy versus what they'll lend to real estate, it's a bit of a head scratcher, isn't it? It's like,
Right.
oh, interesting, right? So something to think about. But anyhow, so no, I appreciate that. So that's exactly what I talk to clients about is I say, look, I get that I'm paying down the principal and the line of credit is increasing. So now I can use that line of credit to invest and get the tax deduction on the interest. So that's the basics to it. Now, have you been using the policy system to accelerate the mortgage pay down, or have you been?
I've actually just been taking over the line of credit.
Oh, I see. Okay, perfect.
Simply. So like I can just transfer the line of credit over to my policies, because the reason that I wanted to do that is just because, hey, we're recapturing interest. We are leaving that line of credit kind of open if we want to do something else. And then also it doesn't affect my or my mother's credit rating by having that. Because that's one thing I always hate about banks is obviously when you have a line of credit that you're using and is like close to maxed out, it hurts your credit rating.
Yes.
So at least by having it rolled over into my own policy loans, like I can still deduct the interest off of my income anyway, which is exactly the whole point of the Smith maneuver. We're still using it to pay all of the rental properties bills, but then we're leaving that line of credit open so it doesn't affect our credit rating.
Now, this is the beauty of it. There is the process of becoming your own banker. The key words are your own banker. So there are specific coaching recommendations that are made. There are specific rules that Nelson left us behind to follow. There's a way in which to go about starting and implementing becoming your own banker. Mm-hmm. But how you actually run and operate your banking system or what you do with it is completely up to you. It is your own bank. So I started out by saying, I talk to people who want to implement, or they're already using the Smith maneuver. And they say to me, how can I do this with the Smith maneuver? Yeah. And I basically I've shared both of what we just described. First is I can capitalize my policy and I can access a loan and chunk down the principal of my mortgage. I don't like that as much because it doesn't change my mortgage payment. It doesn't lower my mortgage payment. However, what it does do is chunk down the principal, shrinks the amortization, you pay less interest overall, but it'll also create more accessibility on that line of credit so I can access it, lend it out or whatever, and then deduct the interest. So that's kind of, for lack of better terms, like that's one thing that you could do. But what you're doing, which I really like, is you're kind of doing not the opposite, but you're paying down the mortgage. The rental income is paying down the mortgage. That's increasing the line of credit. You're using the line of credit to do things and you're getting the tax deduction on the line of credit. But now you're like, wait a minute, I have this policy system that is privately owned, you control, and that does not show up on Equifax or TransUnion in Canada. Yeah. So you are building up the policy and you're accessing loans and you're using it to chunk down the line of credit. And basically you're recapturing, you're buying back the debt. You're transferring the debt from someone else's bank where it's their asset and your liability. And you're transferring that debt into your own policy system so that it becomes an asset to you. And the policy values are growing, but you're also beating down the principal of the line of credit because it's helping, like you said, manage your actual credit because you're still continuing to use the banking system and leverage banks, and credit is really important to you. Yeah. So it's 6 of one.
My policy system is big enough that I can just have everything in it.
Yeah.
I still rely on the banks a little bit, but yeah, like I said, we found that it was frustrating when we were trying to get the mortgage for the fourplex, just because that line of credit shows up on my mother's line and mine because it was joint. So the bank's like, oh, you owe like $26,000 and you owe $26,000, and my mother doesn't have an income because she's retired. And I'm like, no, it's the same money. So like,
so good.
So I'm like, don't worry, I'll take care of that. Here, I'll pay down a whole bunch of it. And then so now I just use it for paying down the system. Because I did actually try really hard to wrap my head around to see if I could actually use a policy for the Smith maneuver, take those premiums, deposit the premiums, get the amount out and pay it. But it doesn't work out quite the same when you're trying to do it with the Smith maneuver by taking the actual payments, because you wouldn't believe the paper that I had written down. It was lines upon lines upon lines of how the money would flow and how much would be available and if it works. And I'm like, no, this isn't going to work. The only way I can do it is if I actually just do the line of credit and then pay down the line of credit with my policy loans. And it works that way.
That's the other beauty of it, right?
Yeah.
First of all, I acknowledge you because what are you doing? Well, you're doing the work.
Yeah.
It's your money. Nobody cares about it more than you do. I love you. I want to take care of you. I want to help you, but it's your money. It's your life. And you're putting in the time and energy to determine what's best for you. And then you were like, wait a minute, it's simpler to do it this way. Well, that's what worked for you. And that's the beauty of it. And then, you're still implementing the process. And I like that you said, hey, until my banking system's large enough for me to control the entire banking function, I'm still using the banks. Well, this is the beauty of what we share sometimes with our clients. Now, Nelson would slap my wrist if he heard me say this, but if you build up your banking system, and let's say you start using that policy system to maybe accelerate mortgage pay down. Now, let's say I have an outstanding policy loan, which again is residing in my banking system. So I'm fine with that. I get all the money back. Let's say I paid down my mortgage completely to zero and I accelerated the mortgage pay down. I no longer have that burden above me. I no longer have that risk there. I'm completely in control of the mortgage, the loan repayment back to my own policy. My rent is being paid by the renter. And instead of most of that rent going to the mortgage and being locked in a financial prison, it's going to someone else's bank. All of that rent now can flow back to my own system. And you don't lose the option to go to the bank and say, hey, I earn good income. I've got this piece of real estate. You could still register a line of credit against that real estate and use that tool to acquire more assets. So it just gives you more options.
It's so many more options. And that's what I love about it. And like the way with using the Smith maneuver, like we do kind of max out on the maximum that we can put extra towards the mortgage.
Right.
Yeah. So when I kind of hit that point, I can actually just pay down that credit line more with the excess rental income.
Right.
And then when our year comes up again that we're allowed to put more down, I can actually borrow again there, put that chunk on, and then basically have the process accelerated even a little bit faster. So
exactly, you're just moving money. Exactly what who does? Banks. You're just banking,
exactly.
Right?
And honestly, like that mortgage is up for renewal in I think 2025, and we'll have paid off over $115,000 of it, and it was only like $160,000 mortgage anyway.
Oh, geez.
So when it comes up for renewal, like the payments will be like next to nothing. Well, because right now I'm using my rental income to cover like not only the mortgage payment for my mother's property, but also using it to fund the entire rental property. So it's actually kind of, that money is kind of doing double duty right now.
Double duty, which I love. But the other thing is, by the time that mortgage comes up for renewal, the likelihood is your banking system could buy out that entire mortgage.
Yeah, it's very possible.
Yeah, and that's completely up to you, which is another great thing. But something I'd love to hear from you, just because the good news is, you've worked very hard. You were doing well before you and I started working together anyhow, which was cool. You were already doing real estate and all that kind of stuff, but the pain and the heartache and the anxiety that may occur when I'm deciding to sign that dotted line, or I'm jumping through all the hoops and I'm getting my income statements together and my credit. And now you're implementing the process. Now I know you haven't fully controlled the banking function, but just talk a little bit about like, what's that been like for you now to be able to see like the possibility and experience having gone through some of this?
I can honestly say that like the stress of getting ready to sign my first policy and to begin the process was nowhere near the kind of stress that I have had to deal with, like, because years ago, my ex and I, like we built a house and it came into like a whole bunch of like overruns and trying to get approved like lines of credit and like all this kind of stuff going, so that would keep us from going bankrupt, basically. That is what I would call stressful. And I just think like if I had had the system going, like when I started working in my 20s, we could have alleviated that entire problem. I never would have had anywhere near the financial stress in my entire life as that I have had. Like if I've had this system going, like if anything, this just decreases my financial stress to such a degree that I can't even explain it, because I'm just rerouting money that I already was just putting elsewhere, like into RRSPs, into TFSAs, into savings, into
mortgages, into lines of credit.
Yeah. And I'm just rerouting it, using it in a different process, which is all IBC is. And it just has completely, like I said, decreased my financial stress because I don't have to worry about it. I'm on mat leave now, and it's like, oh, okay, well, there's my my line of credit for that. Wouldn't even have to worry about making the payment if something horribly went wrong and my tenants didn't pay. I just wouldn't even have to pay. It doesn't matter. I have the money there. I could just cover it. If my basement suite ends up being vacant for 5 months, whatever, the mortgage can still and everything get paid because my system will be covering it, and I'll have that extra safeguard built in of that extra line of credit.
Even like when you're putting money away for management, or you're putting money away for contingencies, or you're putting money away to cover vacancies, that money can all live in your private banking system. You can just store it there. This is so awesome. So talking to my wonderful client, Rebecca, about the process of becoming your own banker, implementing the infinite banking concept in Canada. So if you want to learn more, make sure that you click the link in the post description below. That's watchibc.com. Go to watchibc.com so you can get an introductory webinar to the process of becoming your own banker. You can learn more about what Rebecca and I are talking about. So this is so powerful. So you've actually gone through, and now you can actually see, like, you're getting excited. We began the call talking about, like, you're in creative mode. You're like, how can I expand? What else can I use this for? But you're doing the most important thing. You're talking about the process. You're reading about the process. You're engaging with your coach on the process, and you're just continuing to expand your knowledge. Is there any other specific examples that you could point to that in the way that you've been able to use your policy system and implement the process?
I've been trying to start investing the policy loan, like through policy loans for our policy with my son, into private lending. So I've just been adding those on top of other private lends that I'm doing. So it might only be, $4,500 that we have access to because we just started the policy. But, when I can lend that out and make a 14% return, I'm paying 6.2%, and then I'm making 14%, and I can just roll those funds back into the policy. So I'm already starting the process of getting his policy to, like I said, pay for itself, so that I won't even really feel like I'm funding it.
Right. The cash flow from the private lending is paying the premium, repaying the loan. What is that going to do for your potential unborn grandkids that may or may not show up one day? We're already thinking generations ahead, because your son's going to have a large insurance portfolio in his life. That means there's more policies or a larger amount of death benefit you can put on those grandkids if and when they show up. And what I love about what you said is, you're like, look, I'm accessing money from my son's policy. I'm taking that money, I'm going to put it into a private lending, which creates cash flow. That's good. While at the same time, what's happening to the policy values every day? They're going up, and momentum is being created in the system. And now you said, hey, I'm paying 6.2% interest. I want to isolate that for a moment. Let's just look at what the typical Canadian is doing when they're looking at something like private lending, and they're allowing someone else to be the banker, versus what's available now for you and I when we become the banker. So let's walk through that specific example. I don't care what the amount of money is, but let's just say because we're talking about borrowing, let's pretend we're using a line of credit or a HELOC. So you access money from a HELOC, you lend that out, and obviously, let's just say the HELOC is 3%. Who cares? You're earning. If it's a secured. So let's say it's a secured line of credit. I got 3.5% or whatever it is. Now you're earning 14%. So you get to deduct the 3.5, which is great. And you're earning more than what you have to pay as interest. So it's a win. But you had to access someone else's pool of money, must make a minimum required payment. They're in control of all that, and they get every penny that you pay back as interest. It's flowing to their bank and being put to work for their business, and you can't access that money again. Option number one, no problem. Option number two, we capitalize a policy. We access a policy loan. We pay 6.2% interest on the policy loan, simple interest. So it's like peanuts. Now we lend the money out and we create cash flow. And now your 14% is more than 6. So that's good. But when you pay money back to the policy system, piece number one, you're a co-owner in the business. So every payment you make, principal, interest, premium, whatever, every dollar you send back is being put to work for you and me and all of the other co-owners. Now you pay the 6.2% interest, but here's the kicker for me. Why do we not care about the interest? I don't care if the interest was higher. How much of that interest do you get to go back and re-access and use again?
All of it.
All of it. So every penny that you pay back, not just the principal, when you become the banker, When you become all four characters in the financial play, the depositor, the borrower, the banker, and the bank owner, you get to set the terms of the loan, you get to grant access to the money, you get to set up the repayment schedule, and you get all of the money back.
Yeah.
And now you're growing money effectively. You said it earlier. You're putting your money to work in two places. I'm depositing premium. I give rise to a death benefit. My money's working there. I access the money as a policy loan. I lend it out. And now I'm getting cash flow. Good. And my cash value is still growing for the same premium dollar.
Yeah.
Powerful.
The thing is, when you ask the question about how nervous I was, or like the stress of actually like starting my own policy and like what goes into that, like I still say, and I tell people this all the time, like I feel like my biggest mistake when I started my policy was just thinking too small. I felt like I'm like, okay, well, like this is money that I normally would have put into my RRSP, so I know that I have it. That's what I'm used to putting away. I can just like, I know that I can come up with these funds. And then it was like after I funded my first policy, I'm like, I have so much other available cash, like that I can reroute this way. And like, I need to get it into policies. I just like, how can I expand my system like so much faster and so much more? Because like still feel like that was my biggest mistake, was just starting too small.
I was actually talking about like the nervousness and the anxiety of doing like applying for mortgages and stuff. But you raise a good point. Like anytime you do something new, our brain is going, so starting a new policy, it might all be good. You might be totally convinced it's a great idea. It's still going to take something to take the action.
Yep.
So that's awesome. But then to your point, this is exactly what I say to people when I talk all the time about the process. I wish I would have started bigger. That's the only thing. The more I put in, the better it does. Now, of course, you have to be responsible. You have to build something that's sustainable. But to your point, it's exactly what we're saying this whole call. The more you see this process, the more you'll see you didn't see. As soon as you got started, you were like, wait a minute. Why didn't I expand or build this bigger from the start?
I'm like, I could have made this 3 times as big as it is, and then everything would have worked out fine.
Yeah, it would have been better. So being able to achieve all of this, and you've been practicing the I know you've known about it for quite a while, but really, I mean, we got the first policy in place, like less than a year ago, right? Almost
last April. So I'm like dying for April to get here so I can just make my next policy deposit. That's like, I cannot wait. Why does April take so long?
I know, right? Years. Yeah. It's the shift in the context, just like what you said, that consumer mindset, right? I was showing somebody today, my wife's policy. Now, I don't know the exact numbers, but we're in her second year.
Yeah.
We're about to hit the 2nd year anniversary and be in the 3rd year of this particular policy. Based on the premium and how it was all structured, the accessible growth in the policy in the first year was somewhere around $5 something a day, or whatever, $4.34 something, whatever. It doesn't matter. It was in that range. Now we're in the 2nd year, and because we've capitalized more, we received a dividend, the death benefit is expanding.
Yeah.
And the window of time to age 100, cash value, death benefit match, the window of time is shrinking. So now we're just in the 2nd year, and the policy's accessible cash value, the loan availability every day, is north of $8 a day already.
Nice. Yeah.
Right. So it's like, if that policy, to your point, if I would have doubled that premium at the time, it's fine. We have 10 policies in our system and we're working on our 11th, but every single one of them is doing that every day. Just a little engine that's just increasing. So Rebecca, we'll have to do this again if you're open to it.
Oh, absolutely.
Thanks so much for your time. Remember, go to the post description hit the link in the post description below, watchibc.com, and make sure, I know you got a ton of value of listening to Rebecca and I chat today. Make sure you check out the playlist beside me here. Just continue to consume content and take action.